y'all don't know Brandon, dude's a G, mentor, friend, does everything. Private money lending, retail, coach me, marketer, whatever. Like the reason I wanted to bring him on today is for one, Brandon, your mindset's insane. For one, that's like the biggest thing I've learned from you, period. And I was hoping I wanted to give you a brief of what you're looking at here.
Yeah,
We got
yeah.
people in here that are doing six figures a month on deals, but maybe they're not investing any of that. And then we have some people maybe just getting started on their journey that are still accepting these low fees. And I know me and you talked about that early on.
Oh God. Oh, so yeah, we can talk about that. When Travis, shit, this was probably 2 years ago, we got on a call and I'm looking through all of his deals and I said, "You're not charging enough." And he fought me on it and he's, I'm a salespeople and this and that. And one thing that I'll say to you guys that I said to him is whatever you look for, you find. And I said, look, if you go back and you tell all your salespeople you're not going to take any less than, I think we said $20,000. And he's, no, man, no. And I said, dude, just trust me, just try it. And it was like 2 weeks later, he's, bro, we're ripping 25, 30, 40 grand rips now. And I was like, yeah, I know.
Yeah. And I know we spoke the other day and you were saying, dude, if we were going to do something together, and you're like, we only take 20 minimum. Right. And used to, I think that was crazy. And I keep trying to drive that home to everybody. And I'm glad you said that.
I know I'd be glad to talk about that too, is and this conversation can go whatever, wherever you want to lead me to. But to that point, what you
Okay.
have to think about is when you run a business, a lot of people don't think about and dial in the back end of what does it actually cost me to do business. So one of the things that I will tell you is I've never seen people that run a wholesale operation at a really high level maintain a high level of profitability as they scale if they take less than a $20,000 assignment. So we don't take less than $20,000. I don't give a shit. I won't do it. And I'll give you guys a prime example. I just coached somebody who I respect, I think the world of in this industry, really smart guy. And he said, Brandon, I can't figure this out. We're doing a bunch of deals and I'm not making any money. I looked at the back end of his books and it was costing him through all of his expenses $11,000 to generate a deal. And on average, he was taking $13,000 on an assignment fee. And I was like, there's your problem. So a lot of times what people think about is you in your head say, it's $10,000 profit, but it's fucking not because it cost you $11,000 to generate the deal. So a lot of people in real estate don't really know their actual numbers. They don't know their customer acquisition cost. They don't know their true cost of everything. And a lot of things get thrown around in this industry as laissez-faire terms of it cost me $4,500 to generate a deal. No, it didn't. What it actually cost you to generate a deal is all of your expenses through the year divided by the amount of deals you did. That's your true cost to do a deal. So the reason why I'm $20,000 minimum is because it cost me $9,800 to generate a deal through all of my expenses. So if every time I'm taking a wholesale rip, it's 20K, I'm going to run at a 50% margin, right? And if I'm going to be in the wholesale game, I want to run at a 50% margin, right? And so that was one of the things that Travis and I talked about. And to his credit, he didn't listen to me at first, but when he did, he came back and he's like, holy shit, we're not just getting 20. We're starting to get 25, 30, 40. And the best analogy that I can give you is if any of you guys have bought a car recently, or you remember the last time you bought a car, like you never saw that car on the road, then you bought it, and then you start seeing it and you actually start seeing the same color. It's because what you look for, you will find. And so if you go looking for eight, nine, $10,000 wholesale fees, you'll find them all day. If you start to look for 20, you'll get 20, you'll get higher. And then also what it'll teach you to do and your people to do is negotiate better. You got to buy a deal deeper. You got to negotiate with the seller better. You got to negotiate with the buyer better. So that I'm glad you brought that up because you know what I mean? And part of that too is holding a standard and having a standard. If you're going to run a business, you should hold and have a standard. I wholeheartedly agree with that statement. I'm glad you mentioned that.
I appreciate it, dude. There's so many I hate to say it, but there's so many broke ass wholesalers out there. Everyone I talk to is like chasing this dollar. They're so broke. And if you're there, cool, whatever. But that's why.
Yeah.
Like that's why you get a 7K rip and it's gone. You paid your bills. It
Yep.
doesn't work and it doesn't change until that flip. And I just wanted it to your credit. This dude is the one that like just flipped the switch in my brain.
100%.
And dude, you're a cash machine in yourself. And I know that you're big on you have this brand like build wealth, right? Can you touch on some of that for people that are making cash that maybe want to do something like that?
Yeah, so if your income is going up, but your net worth isn't, you're not playing the right game. You're actually playing a little boy's game. You're not playing a man's game. And if you want to get anywhere in this life, it's going to be based on what your net worth is. And what tends to happen in the real estate world is we are fucking transactional. I want to get that rip. I want to get that rip. I want to get that next deal. We're sales and marketing guys, right? So what happens is you sell, you make a bunch of fucking money. Number one, it's ordinary income for most of you. So you're getting fucking crushed in taxes. You're giving up 30-40% to the IRS. I have no problem telling you guys this. I've not paid federal income tax in 8 years. And I've been audited, I think, 7 or 8 times. And the first time I paid income tax was last year. I paid $7,500. And I will tell you guys, I make high seven figures. I did last year almost eight. And the reason why is because I leverage assets, I buy assets, cost seg them, accelerate the depreciation. So it lowers my tax liability. But not only that, I mean, I've probably got 30-40 million dollars in net worth in 2 apartment complexes. Like I bought an apartment complex, they fucking tripled in value in 5 years. In two, right? And so what I would tell you guys is that yeah, you go over here, you make the money, you make the rip, whatever, that shit's all cool. And you've got to have active income. But at the same time, if you don't have passive income, you will trade time for money for the rest of your life. Do you know what I mean? And if you don't have an end game of, and whatever it is for you is cool, right? Hey, I want to have $10 million worth of assets generating me $500,000 worth a year. But true wealth, the definition of wealth is your passive income exceeds your active. Meaning, if I don't go to work today, my passive income pays me more than my active income. And a lot of people play this game the wrong way because they transactional, make a shit ton of money and make a shit ton of money and make a shit ton of money. They're not good stewards of their money because they don't figure out how to keep it, right? It's not what you make, it's what you keep, right? So they're not good stewards of it. They don't learn tax, they don't learn corporate structure, they don't learn the back office accounting side where you can keep a bunch of your money. And also, they don't buy enough and keep assets. If I could do anything all over again, I would have never sold one piece of property that I ever bought. I would have figured out how to hold it all, pull out lines of credit on it to live off of it, and just continue to build and build and build and stack my wealth, right? Because think about depending if you guys have been in the game for a while, but like I go back and look at a wholesale property that I made 50 grand off of, and the fucking house has tripled in value. I made $50,000, but I could have made 300. Do you know what I mean? Now, different timeline, but still. And if I get 100 of those, do you know what I mean? Then that's when the shit starts to get really silly. So what I would encourage you guys to do is at a minimum, you figure out what your tax liability is going to be based on where you're at right now and throughout the year. And at a minimum, you should be buying assets in tandem with your income to offset it. So let's think about it like this. Prime example, you make 200 grand this year and 40% of that is going to go to the IRS and to the state in taxes. If I'm you, I take the money that I was going to pay the IRS, go buy assets that I can hold and depreciate because you have to pay the money anyway. And then if I can avoid paying it to the IRS and putting in an asset that I'm going to hold long term, that's the win. And if you look at anybody that's truly wealthy, that's what they all do. Wealthy people, you always hear shit on the news and stuff like these wealthy people don't pay any taxes. They fucking don't because the tax code was made for them and it's made for us and it's specifically made. You guys for the most part are probably all considered real estate professionals. there is a cheat code in the tax code for real estate professionals of you are allowed to write depreciation off against your active income. And then if you cost seg and you accelerate the depreciation on a property, you can take that entire cost segregation in 1 year. So one apartment complex that I bought, we paid 7 million for it. I cost segged it 2 million bucks. I got a $2 million loss on my taxes that year. Went right against my income. Do you know what I mean? And that is the beauty of buying assets. Even small single family houses, especially now because 100% depreciation is coming back in the new bill, 25 to 30% of the sales price of that house you can write off against your active income. And that is such a tool that is so underutilized that people aren't using. And I'll tell you, like, the other thing too is long term, think about it like this. I give you like a super simple example. Think about if you bought 10, just 10 single family properties and you held them and they were 300K a piece and you're smart with the debt. In 15 years or less, they're going to be paid off. In that 15 years, they're going to double, maybe triple, but let's be conservative, say they double. So you've got $3 million worth of assets that went to 6. The rent's now going to double too. So you're getting $3,000 a month, goes to 6,000. If you run at a 50% expense ratio, they're paid off. You're getting 30 grand a month in passive income. You got $6 million worth of assets paid off, right? Does that sound difficult to anybody on this phone call? No. You guys can all acquire 10 properties probably this year. It's just the thing where people make a mistake is they don't buy and hold enough property. And then I've held so much property for so long that I have so much equity. Travis knows this. I've got lines of credit against all my real estate that I'm paying 7-8%. And I go do hard money loans against that and get 16 to 18%. So now I'm getting a return on the equity that I've built and I don't have to sell the property. And then anytime I want to go buy other real estate, I pull out equity of my current properties, go buy more real estate with it, and I'm pulling the money out tax free. So I've learned how to leverage and play the game at a high level and not pay taxes and avoid paying taxes, but yet also I've stacked a substantial amount of passive income where I don't have to go chase deals if I don't want to. Now I'm a deal crackhead. So like I'm gonna go always chase after deals because I'm a sales and marketing guy, but I don't have to if I don't want to. And the one thing is for you guys on this call, like you probably don't want to wake up at 60 years old and have to go sell a house, right? If you want to, that's cool. Nothing wrong with that. But if you can wake up and be like, yeah, I can wake up and money's in my bank account because I've built passive assets and I've stacked passive assets, that's true. That's truly a win. And again, I'm not telling you to stop anything on your active income side because you got to get active income to get there. But in all reality, if you don't get on the passive income side, you're going to work for the rest of your life. And if you don't make money while you sleep, then you're going to have to trade income for your time for the rest of your life. And for me personally, as I've gotten older, I like less noisy shit. Like I like to just get paid and not have a bunch of fuckery involved. And so I like to buy and stack assets that are going to pay me and I don't have a bunch of headache around them. I used to not think like that though, right? Like I used to hustle, go get another deal, go get another deal, go get another commission, go get another wholesale rep, go get another this, go get another that. You know what I mean? And I didn't look at it from a long-term standpoint. And long-term wealth is built on you buying and holding real estate assets. It's probably one of the best and safest ways in the world to become extremely wealthy in a short period of time. And it's one of the things that is way more easier than what people like. People think it's hard. It's not, right? And a lot of the assets that I've built, I've not put any of my own cash into because I've burned them, right? It comes through the wholesale side of my business. We're buying it undervalued. I'm renovating it, refinancing it, the whole deal, still cash flows. And I started buying rental properties in 2008. So you guys can imagine the amount of equity that I have in my properties, right? And then I transitioned from single family to buying more multifamily and more bigger assets. And I still will buy single family because I like the asset class, but I go more after bigger stuff now. Like me and Travis been trying to buy, we put offers in on a couple of mobile home parks together. So that kind of shit too. But you don't have to do it at a crazy level. If you just every year buy assets at a minimum to offset your taxes, it is the smartest thing you can do because you would have to give that money to the IRS regardless, right? So my thing is, why in the fuck would I want to give the IRS this money when I could take it, put it into a real estate investment asset that is going to bring me wealth, bring me cash flow, and avoid me paying taxes? And I'll tell you guys, I'll even buy an asset that breaks even if I need it for the tax write off because it's right. If I buy it today, it's only going to get better. The debt structure is going to get better. The rent's going to go up. And if I don't buy it, I'm going to have to give it to the IRS. So I'll tell you guys, man, that is literally the cheat code because it's not what you make, it's what you keep. And if you don't do things like that, then you're going to struggle. And I'll give you guys a book to read that will change your life and your way of thinking on wealth. It's a book called The Banker's Code by George Anton. And a lot of you guys are in the real estate investment game. It schools you on how to think like a bank and how to build your business like a bank builds their business. Because who typically always wins in a real estate transaction? Whoever's lending the money, right? And typically over the long term, who typically makes the most money? Whoever's lending the money, right? And I would encourage you guys to not just think and understand things from the sales and marketing aspect, but understand things through the wealth lens, right? And the wealth lens is you're not trading time for money. Wealthy people buy income. They look to buy income. I don't want to buy sales. I don't want to buy marketing. I want to buy income, right? And their version of income is I want to buy income that's passive, that doesn't take more effort, energy, things like that from me. So that's one thing early in my career, I just had no fucking idea and I didn't think about it. And I was like, yeah, man, you know what I mean? Like in the first year, like I made a shit ton of money and it's September and I'm sitting in my accountant's office and she tells me what I owe the IRS. And I was like, yo, what the fuck? Are you serious? And she's, yeah, you made a shit ton of money. This is the way that it works. And I was like, this is fucking stupid. I don't want to do this shit. This doesn't make any sense. And so then I went on the journey of learning how do wealthy people think? How do they move their money? And I'll tell you another thing. Travis and I have a mutual friend, Bobby Castro. I've learned a lot about money from Bobby. Bobby, like many wealthy people, doesn't sit on cash. Wealthy people don't believe in having cash. Why? Cash is not an asset. You think it's an asset. On most banks' balance sheets, your cash is not an asset. When it becomes an asset is when the bank takes it and invests it in a vehicle that pays interest or pays something back to the bank, right? So another thing that I learned from wealthy people, I obviously make good money. Money comes in every single month. It goes out into various different investments of things that I invest in. Family banking policies, hard money, real estate, those things where I'm invested in assets, because this is what it does. It forces me not to spend money because I like nice shit. Like I got a couple exotic cars, and if I had access to all my money, I'd probably have 20 exotic cars, and my CFO would fucking kill me. So the money comes in, it goes out, I can't even touch it, and it goes into a myriad of investments, right? So it keeps the cash away from me. It keeps my money consistently generating a return because this is what I've learned from wealthy people. They don't sit in cash. They don't have their cash sitting in the bank because what? It's a depreciating asset. They're putting in an asset that appreciates and that is paying them some type of return. Now, if you're like me and you came from not having money and you came from being poor, then you get money and you're like, I want to fucking hoard it, right? And then you're like, I feel safe with it in the bank. Do you know what I mean? Because that's what you've always been taught. And I just want to give you a little bit of a thought process from a belief change. You will not get wealthy sitting on cash, right? It might make you feel comfortable. It might make you feel safe, and that's okay. And look, everybody's got to run their own lane, and you got to do what you want to do and what makes you comfortable. No one got wealthy by not investing their money, right? And no one got money or got wealthy by making active income and putting it in the bank, because your money does not multiply and does not grow if you don't learn how to invest it. And oh, by the way, you're on a fucking real estate call. So you know an asset class that's probably the safest place in the world to put your money, right? Like I feel safe in real estate all the time. Yeah, maybe it's not going to get me a crypto return. Maybe it's not going to get me this return or that return, but it's going to get me something that I feel is safe where I'm not going to lose. But what I want you to think about and challenge yourself, money sitting in the bank is a lazy employee. It's someone that is not going to work for you. And if you can take your active income, put it in passive assets, invest your money where your money's making a dividend, compounding interest, as Warren Buffett said, is the seventh wonder of the world. If you look and you study any wealthy family or any wealthy investor that got there by consistently moving and recycling their money and putting their money in things that consistently compounds, right? A lot of you guys have probably figured out the first part of the equation. Can't invest money if you don't make it, right? So if you can figure out the active side and then learn how to deploy that into the passive side, and then over time, that passive side starts to increase, and then it gets past your active income, that's when you truly can get on the wealth side. And then you can wake up and say, I can do what I want. I choose to do this or I choose to do that, because you're not trading time for money any longer.
That's when you're making more money is what's funny. When you're
Yeah,
not trying as hard. It's crazy. And I want y'all to think bigger. That's why I bring in people like Brandon, because he's like the biggest thinker I know. And you just gotta, some of you, it's not gonna resonate right now. And it's planted. And it will. That's okay. Brandon, I got you here. I got one more point, and I'll go to Q&A if that's okay, because there's
of
something
course.
else that you do freaking awesome.
Yeah, of
And
course.
I've only convinced three people, which a couple of them aren't on here, but their socials have blown up and they've done six figures just from social media
Of course.
a month, is marketing, being a marketer and how important that is. What do you like? I know you, I know all your thoughts on it, but what do you think?
About, say that again. I lost you for a second.
Being a marketer, like how important is it, like marketing yourself on social media?
Oh, dude. So Travis knows this. I run a couple of real estate funds, meaning where I raise money. I've raised millions upon millions of dollars from social media. I can't even quantify the amount of money that social media has made me. And you, for a lot of us, the challenge is I don't want to look like this, or I don't want to be this, or I don't want to be like that guy's a fucking douchebag, or I don't want to be viewed as this. Guess what? You don't want to fucking make money. You don't want to make money. Not at a crazy level. To be just blunt with you guys, like I was anti social media, everything. Okay. And let's take, for example, Grant Cardone, whether you like him, whether you don't like him. 10 years ago, nobody knew who Grant Cardone was. People knew, but not to the level that he's at now, right? I'm sitting at home last night when I got back from the gym, just having Fox News playing in the background, and they're interviewing him on Fox News about what the Fed's doing, because he's now considered an expert in investing in real estate. And if you actually look at some of his deals, they don't make any fucking sense. Like those of us who really understand real estate, it's like, nah, bro, I don't know. But here's the thing. Here's what he did. He told everybody 10x, 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 right? He told everybody real estate's the asset you need to invest money in, and just give me your money, I'll invest it for you. And then all of a sudden, what happened? He blew up overnight, and he's raised shit tons of money, whether you like him or not. And he's become a household name talking about real estate. And all he did was go on consistently and talk and talk and talk about it. Now, he does and says shit on social media I don't agree with, But the one thing we can all agree with is he's a great marketer. Do you know what I mean? And what I want you guys to think about is no one knows what your skill level is or what you do unless you talk about it on social media. And that might make you feel uncomfortable, and I get it. But guess what? There's somebody like me who's willing to, and I'll steal that customer from you. I'll take them from you in a heartbeat, right? And if you want to raise money, if you want to do deals, there's so many things that it does that the inherent benefits will pay you for the rest of your life. Like what I want to tell you is marketing will get you rich, branding will get you wealthy. Do you know what I mean? And if you think of the big brands in the United States and in the world, you know that brand by the look. They don't even do calls to action anymore, right? Like they've built such an institution in your mind from marketing that you will do business with them just from their marketing. And again, like it's not necessarily who's the best. Grant Cardone by far is not the best real estate investor out there, but he damn sure is the loudest. Do you know what I mean? And so what happens? Do you know what I mean? He's top of mind for everybody all the time. Everybody knows who Grant Cardone is, whether you like him or not. And so what I would just tell you guys is, so for instance, I raise money. My Instagram handle is mailbox money, right? So mailbox money B. And I did that on purpose. That was intentional all around raising money. So I literally wake up every single day because I market consistently. And my DMs, I'll have somebody say, hey, Brandon, I want to invest 100 grand, 200 grand, 300 grand, 700 grand, whatever. Bobby, Travis and I's mutual friend, Bobby has invested over $1 million with me. Do you know what I mean? And Bobby, when I met him, knew who I was from my social media, right? Self-made billionaire, knew who I was from my social media. I can't stress this enough. You don't want to make enough money if you got to put all the bullshit aside of what am I going to sound like? What am I going to say? Travis is on social media in a thong and shit. Do you know what I mean? He don't give a fuck, which I can appreciate and love because he doesn't give a shit. And the other thing too is real shit. People appreciate authenticity. So like he's showing you guys, he's showing you, man, I'm prepping for a show. This is what I'm going through. So he's showing you all facets and sides of his life. That's what people respect and appreciate. Think about it. Motherfuckers get paid to be an influencer. They don't know shit. And they get paid stupid amounts of money. If you actually are a subject matter expert in something and you know what you're talking about and you do it every day, you have more institutional knowledge than 98% of the population. And if you don't talk about it and share it, people don't know it. And the thing is that you can be whatever you want to be on the internet, right? From a standpoint of what you're branding, what you're messaging, what you're branding, whatever it is. But the amount of money that you can make just by building a brand, I can't even quantify what it has done for me. It's unreal. Travis knows this. I've spoken on the biggest stages in the world, stadiums, keynoted stadiums, raised shit tons of money, done all kinds of deals, relationships, doors open for me that I never even expected. And I'll give you one piece of advice is the mistake that everybody makes is they start on social media and they're not consistent. Or we all have this dopamine like addiction of I want to put something on social media, I want 100 people to like it, or I feel like I failed. I can't tell you how many times I've had somebody reach out to me on social media and said, Brandon, I have watched your stuff for 2 years. I'm to the point now I feel comfortable with investing. I want to invest $100,000 with you. Never liked my post, never sent me a DM, never commented, nothing. Right? People are seeing your shit. Do you know what I mean? And just because you don't get a hit, you don't get this, you don't get that, that doesn't mean shit. You're building a brand. When you build a brand, you commit to it. And understand when you build a brand, like whether you like them or you hate them, everybody knows what Trump's brand is, right? You knew what Trump's brand was before he ever ran for president. Again, whether you agree with anything he says or does, he built a huge brand around his name. And again, He'd go on before he was president, he'd go on TV, he'd say all kinds of crazy shit, whether you agree with it or you disagree with it. It was intentional. It was part of his brand, but everybody knew it. Do you know what I mean? He was smart about how he branded himself. Do you know what I'm saying? How powerful is a brand? The motherfucker became president twice. That's about as extreme example as I can give you. But that's real shit. And again, I'm not talking politics. I'm just saying he became president because he became a household name from a branding standpoint. And regardless of where you sit politically, that's a fact. That shit came from his branding. I'll
Dude,
get off my soapbox on that.
no, thank you so much, dude. This is like just millions in value, and that's why I'm so appreciative you came on. If you got time, I'd like to do a Q&A if
Yeah,
that's cool. You got time?
be glad to. Absolutely.
Matt, you got any questions for Brandon while we got him here? Coin.
And I wish I did have something. I just a lot of knowledge. Like that's good shit, stuff we already know, but just got to take action on, keep moving forward. That holding on to everything and not letting things go, it's really ringing true to me right now. Like, I've got a couple properties that I'm debating on selling, but I need to find a way to keep them.
Yeah, and guys, the tax side of this, man, like learning and understanding. Think about it like this. If we both made the same money, but you're giving up 30-40% to the government, we didn't both make the same money. What I
Right.
want you to start thinking about, all of you from this call, is taxes aren't taxes. Taxes are a business expense. And you have the power to cut that expense to zero.
That's freaking huge. Garen, what you got?
Man, my ADHD is going crazy. This is like some heat, bro. Like, this is some heat. So, all that being said, I feel like I'm in a weird good spot. Like, with all of this stuff, my wholesaling stuff is picking up, dude. I'm a stay-at-home dad, but right now, like, I bought my house in 1920 or something, or like 2020. So it's like I'm sitting on like a 2.8 interest rate. I probably have 160 grand in equity. So it's like I've been waiting to pick up on the wholesaling side so I could even tap into that. But it's, dude, I'm trying to do some shit. You know what I mean? So it's like from that standpoint of like where I stand and my stuff's kind of picking up when I can tap into that equity, or even if I could tap into the equity, I've just been kind of waiting for something like that. What would you suggest?
So if you're gonna take equity out of your house, in my opinion,
I just want to buy something else with it
yeah,
immediately. You know?
I'd buy something else that I would keep that's safe. Do you know what I mean? Leverage that equity to buy another asset that's safe, whether it's another rental property. That's what I would do because of the tax benefits that you get and you're stacking another asset. Do you know what I mean? And here's the other thing, what you guys all have to think about is anything that you're going to buy right now with debt, if it pencils today, it's only going to get better because rates are going to go down, right? Like things are going to change. And in a lot of parts of the United States right now, the market's soft. So people are a little bit more willing to negotiate. You got a better chance of getting a better deal. If it pencils right now, it's only going to get better. And I'll just tell you guys, I've seen multiple market cycles and I've been through this for a long time. The minute they signal, all right, we're going to do consecutive rate drops, it's over. It's going to be chaos. You're going to have people are going to overpay for houses again. The inventory is going to go the other way. It's going to be fucking chaos. So I'd be buying whatever you can now. And if it pencils at 6.5, 7, you know it's going to pencil at 5. And then the other thing is you're not buying it when everybody else is getting a 5% interest rate, so you're not overpaying. And that's why it makes a ton of sense right now to be buying assets.
And a HELOC, not a refinance. If you got a 2%.
Yeah, that's what I mean.
Yeah.
Like
Don't
I just kind of want
refinance.
to keep HELOC in.
Yeah.
Here's the other thing too, is I'm a believer in not having debt when you don't need to. But if you got a 2.6, 2.7, whatever it is on the first, you don't need to pay that off. That's free money.
Yeah, I'm never paying it off. I was just gonna run it into the ground and move out.
Yeah, that's what I mean. Like you don't need to pay that debt off. Let the debt pay itself off based on your payments, but I would not be in a hurry to pay that off because you'll never see that interest rate probably again your lifetime.
Oh yeah, it's a unicorn for sure.
Yeah. Yep.
Gyro, what you got?
Hey Brandon, I'm in a unique situation. I started buying rentals 2021. I have 7 rentals in the North Jersey area. So this market is never slowing down. It just doesn't slow down.
Very familiar with that area. Used to live in New York City.
Yeah, that's where I'm at right now. So my question is, you saying hold the rentals forever, basically. But when these rates drop, I'm sitting on a lot of equity right now. I'm probably 2 million. You saying not to sell, just keep?
All right, so you sell it, you get 2 million, then what?
I don't know. 2 million I never had 2 million in my life. That's what I'm saying.
Yeah, but that's my point is this is why I made the comment earlier is when you don't come from money and you realize money, you want to do all the shit that you didn't or you've never done, which I've done it and I got the t-shirt and it's cool for a short period of time, but it's a lot cooler when you can wake up and be like, I ain't got to do shit because I got passive income to pay for my lifestyle. I can do whatever the fuck I want. So, what I would do is you got to think about, you got to do something with that cash so you don't get crushed in taxes. If you're selling, you realize that 2 million, now you got to go invest it in another asset and you're now paying in at today's market. So the way smarter thing to do is get home equity line of credits, get credit lines against your equity, take that money and invest it. See what I'm saying? Because then you're realizing the equity tax free and you're not going to have to pay any taxes and you can buy more assets.
Yeah, it's just hard to get assets over here at a discount. I
Go to
feel.
a different market. Do you know what I mean? Explore and look at a different market is what I would do. In northern Jersey, like what part of North Jersey are you in?
I'm
Or
in Bayonne, Jersey City, and North Bergen, and Secaucus.
yes, it's never going to go down. It's
Never.
literally never going to go down. So if I'm you, I'd just hold them, take the equity, buy in other states. Like I'm not that far from you.